Hello everyone. Today we're going to have a brief market recap and talk about today's non-farm payroll figure. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my North American opening market comment. Overnight, risk aversion was dying down, but it's been coming back today in Europe. The safe haven yen is up, gold is up, and stock markets are down across Asia and Europe. It's not clear whether that's because of Trump showing some voting strength in a few swing states, or because of the odds of a Fed rate hike are increasing ahead of today's U.S. non-farm payrolls. Now, many market participants think that today's non-farm payroll figure will confirm a rate hike in December, and I think it's likely to. In their statement following their meeting on Wednesday, the Federal Open Market Committee, the FOMC, said the case for an increase in the federal funds rate has continued to strengthen, but they decided, quote, to wait for some further evidence of continued progress towards their objectives. The statement was the same as in September, except for the addition of the word some. So observers like me take some to mean the next couple of data points. That means if the next two non-farm payroll figures for October and November are decent, they pull the trigger. Now the market's looking for today's NFP figure to be 175,000 increase in jobs. Given that Fed Chair Yellen said the year-to-date average monthly job growth of around 180,000 is not sustainable, yet another gain of nearly that level would probably solidify the resolve to hike in December, and therefore it would be supportive for the dollar. So how likely is it that we get a number around there? Well, I'm no quant, I have to admit, but pretty simple analysis based on the past relationship between the NFP number and several other indicators that we already have suggests that the figure should be, or could be, might be around 177,000, which is about what the market estimates. And that's enough to confirm a rate hike, barring any disaster with the November figure, of course. The other indicators released along with the NFP, the other employment data released at the same time, are forecast to be similarly dollar supportive. The unemployment rate is expected to fall back a notch to 4.9%. That's near the level the FOMC has identified as full employment for the U.S. The average working week and average hourly earnings are expected to hold steady. This is all good news and should support the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.